Hey everyone, Michael here. In today's video, I'm going to show you guys how to set up and use the volume flow indicator by LazyBear. This is a great one if you guys actually know how to use it, and I've watched about 10 videos on YouTube about it and they all get it wrong. So let me show you guys how to properly use this indicator, okay? First things first, go over here to Indicators, Metrics, and Strategies and just type in volume flow. Make sure to hit space after you've typed in flow so it actually pops up in the correct spot. Volume flow indicator LazyBear by LazyBear has about 18,000 likes as of now. Give it a gold star because this is something you guys will most likely want to use in the future, okay? Afterwards, I want you guys to click on this twice because I'm going to give you guys two different sets of information. That way you guys can figure out which one works better for your particular plan, okay? Some of you guys are day traders, some of you guys are swing traders, some of you guys are intraday, some of you guys are trading stocks versus crypto, Forex. This works for everything, okay? Now, what I want you guys to do is blow up the first one just a little bit larger, and I want you guys to go over here into the settings tab. If you guys start on the style section, this is fine. I want you to go over here to the first plot. I want you guys to turn the line white. That's going to be this line right here. 100% opacity. Move it to the second or third thickness, whatever you guys like. Second, third. And you guys see the default is to have crosses here. I want you guys to go right there and just turn this into a line. Then you guys can also go from second to third if you just want to see what the thickness will be with the line, okay? Now, for this tutorial, we're just going to be going to the third thickness. You guys can choose whatever you want to, frankly. Now, afterwards, you're going to see the plot 2 right here. You're going to turn this off. You guys are not going to be using this. The EMA of the VFI, which is the volume flow indicator, you guys are not going to be using that as well. You guys don't need the EMA. So we're going to turn that off, and all we have is the green line and a flat white line. That's all you need for this one, okay? If for whatever reason you do want to see the histogram right now, you guys can go over here to inputs and you guys can click it right there, show histogram, and you'll see a histogram pop up. If I had the colors right here, this would be this one right here. You can see how it pops up. Maybe I can change the colors for you guys. There you go, it's red. You guys don't need to see the histogram. The line is the histogram, and it's much easier to read the line than it is the histogram on these particular charts, okay? Now, I'm going to turn this plot back off and turn the show histogram off. For this first one, we're leaving everything the same because LazyBear did an amazing job setting this first default one up because he knew that most people are not going to want to tinker with this stuff like I do. Most people have lives. I do not. I trade, right? Until I hit my vacation stage. And we're going to hit OK. And then for the next one, we're going to go do settings again and do the same stuff for style. So plot 1, white, 100% opacity, third thickness, and we're going to turn this into a line. No plot 2, no EMA, inputs. This is where stuff changes. The only thing we're changing is we're changing the VFI length from 130 all the way down to 20, okay? All the way down to 20. Now, we're going to hit OK. And then from here, you're going to see two different types of charts. You can see the lines are vastly different. Both have a 0 line, and that's about it. The way these green lines move here, vastly different, okay? So the volume is going to be interpreted a few different ways by you guys. So for now, the one that's 20, I'm going to move it down here just for a little bit, and we're going to talk about that one a little bit later, okay? Now, there are a few different ways you guys can use this. I use this in 3 particular ways to make money, okay? The first one is pretty simple. Whenever you see the green line pump across the white line here, the 0 line, that's usually a buying opportunity. You don't want to see it dangle around there beforehand. Let's see if I can find one here. So you don't want to see this type of move, right? And then it pops up. You don't want to see that. You want to see it coming down, taking its time back up, and then you have that big conviction. That's what you're looking for. And whenever you see that big move there, let's see if I can find a vertical line for us right there. And I pop it up one up here just so you guys can keep track of it. And I make this down here. Great opportunity to buy. Now, you're not going to be just buying as it flips over, but it's a strong signal that you should be looking for an opportunity to buy. And for this particular point, this was back in September of 2021. What happened? We had a breakout. So you had the signal right there. You had the breakout right there. You could actually buy a few days later and still be making some strong returns on your investment, okay? You guys don't have to buy it right on the signal. In fact, I would not encourage that at all, okay? Now, that's the first way. That's the easiest way. This is not going to be happening as often if you guys are using the first setup, which is the 130, okay? If you guys are using this on a 15-minute chart or hourly chart, it's obviously going to happen more and more, okay? Now, the second way you guys can make money, and I would say probably, if I go hit auto right here, probably the most interesting one I would say out of all these is maybe if I go over to the 15-minute chart, I might be able to find one. You guys are going to be looking for a head and shoulders pattern within the oscillator itself, okay? I know it sounds really weird, but usually if you guys can find a head and shoulders around here, you guys can be looking for some great opportunities to make some money. Let's see, is there any over here? No. Let's see. No. I wonder, do we have any over here? Okay, so here's one. So let's shrink it down. This is the 20 here. Again, this is one is 20, less of a length, going to be easier for your day trades, okay? Intraday trading. So let me pop this open right here. So you guys can see this head and shoulders. I believe you have your head, excuse me, shoulder, your head, and your shoulder right here, okay? And you see how it breaks above right there. When it does that breakout on the head and shoulders play, let's go right there. That's going to be your opportunity to buy right there for an intraday trade. Again, you're looking for a reason to buy, but it's usually a great opportunity to get ready for a breakout above the zero line here. But this usually happens ahead of the zero line breakout because you're only going to be looking at these beforehand or a regular head and shoulders if you're above the zero line looking for a short opportunity. However, when you guys see these head and shoulders, and usually you want to see one that's a little bit better looking than this one, it does usually give you an opportunity to buy. Look at that. Still a very nice and smooth move. That's what you're looking for as the second opportunity. And you'll find a lot of these head and shoulders plays and reverse head and shoulders, you know, while you guys using maybe the 15-minute charts, the 5-minute charts, the hourly charts, you're not going to really find too many of them, frankly, when you guys using the daily charts, the weekly charts. But if you do find them, they're going to be very strong moves, okay? But for now, let's go back over here and use the regular one. And the third way you guys are going to be using this to make some good profit is just with all oscillators, divergence. Excuse me, divergence. Divergence. So if you guys see that, for instance, we're trending upwards, but the price action is going downwards, usually you're going to be looking for some type of reversal that starts pumping it up a little bit more. Now, in this circumstance, let me see what I can find out for you guys. Let's zoom in here a little bit more. So you do see a little bit of a divergence here, how we're moving upwards. And we were moving upwards there, but then we started coming back down. So let's say from about there to about here, you can see how we're facing some divergence. And what happened? Eventually, we stopped coming back down and we started to balance back out. It doesn't mean it's going to be some crazy opportunity to buy, but a lot of times it can be a good opportunity for you to say, hey, we're probably going to stop moving downward in the short term. If I have a short position, hey, I might be looking to scale the rest of it out. I prefer to use this method primarily when it comes to the daily charts and the weekly charts, and I guess the 4-hour charts as well. Not really much in the lower time frames. If I'm using the divergences lower time frames, I'm going to be using the 21. Okay, the 20 is going to be the primary one I use underneath the 4-hour time frames. But again, if we're looking at some divergences like we are right here, oh, that's a vertical line. There we go. Right, see the divergence going up and the price is going more sideways. Eventually, even though we broke down from there, you should be expecting a larger move to pop up here as that divergence increases. Unfortunately for us, last year we had something called the FTX fiasco of 2022, where a big scam fraud was discovered and it was horrible. So it kind of messed up the chart. But usually, as long as there's no big news, usually we're going to be okay with those divergences. But let it be a lesson that this is not going to be 100% perfect. But again, you can see the divergence happening right here as we're going higher and the price is going lower. Then we talked about the breakout as well with the over the zero line. But that's how you guys are going to be using this for some nice profits, guys. So again, when we cross over the zero line with conviction, if we have a head and shoulders, or if you guys are seeing any type of divergence. Divergence is the primary way people use oscillators in the first place. It's not just going up and down. The divergence is usually going to lead and help you find a way of what could be happening in the future, while other indicators usually are a little bit lagging that kind of give you an inference of what can happen. These aren't going to be as far lagging as other ones. Hope you guys enjoy.